I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldanoilguy.com. Welcome back to the show, Chris.
Hey, always a pleasure, Jim. Thanks for having me.
Gold markets right now seem to be churning around in the same place. Are they ready to break out one way or the other?
Yeah, the gold market is it's had a nice little run here the last couple of weeks. And if we take a look at the price of gold, it's pretty much the last couple of weeks it's been heading higher. And really, to me, the way the gold and sentiment is moving right now, it's kind of the inverse of what the stock market is doing. So kind of stocks topped out, and money has been flowing into somewhat of the safe haven plays, and gold, silver, and miners have been moving higher, kind of finding comfort with investors. And right now, if you look at gold, the price of gold, it's trading near a previous high from back in late February, so it's stuck at resistance. And to me, it's had a really nice run. It's had a nice momentum move. Silver's had a nice strong pop. It looks enticing, like it's about to break higher. But if you look at the whole picture of where money's flowing and the sentiment overall with different asset classes, I have a feeling we're going to see precious metals start to roll over and actually start to head down. And we could actually, gold right now is trading at about 1248. I think we could see it all the way back down to the 1140, 1135 area to test December lows. And that coincides with what's unfolding, I think, in the equities market, which we can touch on shortly. So in the grand scheme of things, the precious metal sector is at resistance. And the leading indicators for gold itself are actually down very sharp today, where gold stocks are down 3-4%. And they really haven't had that really strong pop and rally that physical bullion has had. So that is telling us that we had to be very aware that, we're probably going to see lower prices in gold. So right now, miners are down sharply. Gold is at resistance, has yet to really pull back. But I think it's right around the corner here. We're going to go into a much larger sell-off, I think, than people are anticipating.
So this is a time to be patient and wait for gold and gold stocks to go down and then have a buying opportunity?
It is, yeah. I think we could see, if we're looking at going back to the price of gold, really, gold is in a major basing formation, and these basing formations can take potentially years to unfold. We've more or less kind of entered a base in 2013, and we're on the upswing. It looks as though we're actually kind of in the second half of the base, meaning we're starting to see accumulation. We've seen some great leading signs of for the sector that there's big money rotating in and holding positions. So we're kind of on the upswing, but we have yet to really break out of this base. And we could see gold, silver, and miners still trade sideways or lower here for several more months, potentially mid or late this year is when I think they'll really start to come to life. And we're going to need to see some type of event, a global event, or for the equities market to top out, or potentially both, which would trigger a massive, I think, rally in the precious metals and kickstart a new major bull market. But in the grand scheme of things, I am bullish on gold and the precious metal sector, but there's months worth of work to do to get up to break above the $1,400 per ounce on gold and kickstart the bull market.
Chris, I'm pretty sure, I would say about 9 months ago, we said that gold miners would be very popular. They were, weren't they?
Yeah, they were extremely popular. We saw, we were seeing all kinds of small mining stocks, like pretty much the majority of them, the GDX, the gold index, it more than doubled in value. So the average gold stock, surged pretty much 130%. that was a major rally, and that's what we usually see in the second half of a basing formation and the kind of early stages of a bull market. We see gold mining stocks rally, 60+% on average, and that's what we've seen. And of course, when everything rallies 130, some of them, we saw a lot of stocks moving up. We're talking 500-600% already now. These are more or less micro-cap stocks, but when stuff moves that far, that fast, you need some type of breather. And if you stand back and look at the chart, we've had a very controlled pullback, and right now it's trying to find stability. I think we're going to see gold stocks still kind of flounder around here for a while, but yeah, I think we are in the upswing. It's just we need time to kind of mature this base and for that kind of profit taking to work itself out before we fully turn up and head towards the recent highs in gold mining stocks and the actual bullion prices, and then we'll be off to the races. So
short long term, or short on short term and long on long term.
Yeah, exactly. Say that 3 times real fast.
We'll have more with Chris Vermeulen right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, oil right now, the day that we're talking, has gone up slightly, but it's been a slide from about $54 down to $48. Is it going to stop there, or is it still vulnerable?
Yeah, we had that really sharp slide and drop in price there, and it came down to a short-term kind of oversold support zone, which subscribers and myself, we played that oversold drop, and we raked in some quick profits there, and we were hoping for one final kind of washout low last week, and the market didn't do it. Instead, it's kind of trading sideways, crude oil, and it's very close to a big move, and it's tough to say which way it's going to break because it technically could have a very sharp drop. Right now, crude is trading at $48 a barrel. If it breaks these recent lows down around the $47 per barrel, if it breaks and closes below there, we've got potential to drop all the way down to the 43, and that would flush the market out. That would be a measured move. It would be a critical support zone, and I think from there we could see a very strong rally. That being said, it's at a short-term support zone right now. It's on the verge of breaking out, so it's kind of trading in this little range. If it breaks to the upside, more or less above the 49.50 area and closes above there, then we're off to the races back up to 54. And we should see some type of early warning sign if it's going to break to the upside. And typically we see energy stocks perform really well, and energy stocks have been underperforming. They've been making multi-month lows here. They've fallen finally down into support, and actually this morning in pre-market I was talking to subscribers saying, energy stocks are oversold from yesterday. We're looking for some type of pop, and actually energy sector is one of the top sectors today, having a nice strong pop. But we really need to see this sector really have some huge volume and move in, and that'll give us a sign that crude oil is likely to break to the upside. But at this point, all we've seen in the energy sector stocks is an oversold bounce, which is today, and that is it. And if crude oil breaks down, which at this point it will look like it wants to still break down, we're going to see the energy sector, which is trading the XLE at $69 a share. We could see that drop all the way down to about 65, and that would be like a capitulation kind of washout low, and crude oil should hit its critical support zone, and then we should see both of them have a knee-jerk reaction up. So it's a tough play, crude oil right now. Whichever way crude oil breaks out of this little range, I think is a good play for a very quick and strong move. But right now it's kind of in limbo, and we're just waiting to see if these energy stocks are going to lead and actually give us some insight that crude oil might break to the upside, or if this is just an oversold bounce in the energy stocks, and we see them wash out and have this panic selling kind of low.
Chris, is it hard to predict oil right now because you have kind of a three-pronged thing happening? Libya in a state of civil war, so you never know about supplies from there. Russia appears ready to open up the taps again. And will OPEC freeze production, and will they be able to convince all of their members to go along with a freeze?
Yeah, I don't follow all that stuff. I really stick to the charts and what the leading kind of indicators, which are typically the equities that are directly related to the commodity. So I don't follow the three-prong or all those kind of negotiations and issues, events kind of unfolding. Obviously, that always throws a kink into things. You can get some big movements based off that news. But typically the charts paint a pretty clear picture. If you were to just look at the charts and play strictly from technicals, you can get a good feeling of what the market is doing between the commodity itself and the leading indicators, again, which are typically the equities based around that. So the stocks typically move first before the news, and they should be forming and outperforming if the commodity is going to start to rally.
So the history of a particular stock looks more important to you than what's happening today.
Correct. Yeah.
We'll have more with Chris Vermeulen right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Chris Vermeulen. Before the break, we were talking about, did you watch the nightly news to make your decisions? Do you do that?
I don't do that. I actually haven't watched the news, listened to the news, watched CNBC or BNN, any of those things in quite a few years. I used to always watch them on my computer screen, have them running just to kind of be in the loop. And I haven't done that in probably 3 years already. And the reason being is news is typically already priced in. Events are almost always priced into the markets. And they can be priced in days ahead, and sometimes the market is priced in 6 months in advance of what's expecting. A lot of times you'll see the stock market in general, when we start to go into a bear market, people will be like, what's going on? Why are stocks going down? Everything is booming. But if you actually look forward and forecast where things are going, get some inside scoops from some large corporations of how things are going, you realize business is slowing down. All these phony numbers, share buybacks have been making things look good, but things are actually really bad. So the price charts, which is what I follow strictly, typically are already factoring in what's going to come out in the news, and more times than not. And so that's what I follow. That's my leading indicator to what news is pretty much doing.
Well, Chris, the name of your company is The Technical Traders, and you live by that motto.
I do, yep, strictly.
And how successful has it been?
Yeah, it's to me it's the way to go, because I'm a very visual person. I don't want to have to read and listen to all kinds of stuff. The charts are very simple. You can update them daily. You can draw your lines. They're there when you come back the next day. And you can watch things unfold one bar at a time. If you're watching the daily chart, it's very slow. It's very simple to follow. You can analyze stuff. It's not rocket science. It does have a lot of emotional strings. You really have to kind of figure out, be able to manage your emotions and risk management. But overall, trading the charts is the way to go. It streamlines what you need to do. You're allowed to focus on it. yes, it looks interesting. No, I don't want to touch it right now. We'll wait till something extreme is kind of set up before I want to touch it. And that's what I do.
Now, that doesn't mean you ignore emotion. Tell me about the broad markets and the signals that you see there.
Right, yeah. So we've had some really interesting price action unfold here in the overall stock market, like the S&P 500, the Dow, NASDAQ. And what we've seen is, more or less, we saw a big pop there on news when I think it was Trump was speaking. We saw a huge pop in the equities market. This was about 3 weeks back. And the market's pushed up to new all-time highs. And then, of course, from there, we've been selling off. And pretty much when we saw that, the market was already screaming that it was overbought from a technical standpoint. We had I call it an exhaustion gap. When you have a big gap up on price, a strong rally, it's usually some news event that creates this extra surge of everybody finally just saying, oh, I just got to buy in. I got to get into this market. I'm missing the whole rally. And you get that exhaustion move, and you see, I use the NYSE volume ratios that I kind of created. And I can tell when everybody's piling in and everybody's just buying, that's the sign that we're usually getting to a market top, and that's what's happened there. And I've been telling subscribers and explaining as this unfolds that we're looking for a three-wave correction in the market. We need a sell-off, a little bit of a bounce and rally, and then another sell-off that breaks that previous low. And it's that kind of two waves to the downside, the two lower lows that spook the market and they flush it out. And in order for a strong intermediate signal, like a buying opportunity to add new long positions to your portfolio, you need two things that I find create a market bottom. That is, you need to see panic selling, which is the panic selling ratio indicator that I created. There's thresholds of when it's considered panic selling, and you can see it on the chart with this indicator. And when everyone's selling, you know there's panic selling. People are just hitting the sell button saying, get me out of the position. I'm done. Get me out. And then on top of it, we need to see fear in the market. That's the second half. So the first half is usually panic selling. That means people's stops they put in place to protect their positions they're getting flushed out, they're getting stopped out, creates a big downdraft, lots of heavy volume. And then usually afterwards you get a wave of fear that kind of follows it. And that's followed with the VIX. So about a week ago, we had that big down day in the equities market. That was panic selling. And then 3 days ago, we had the sharp drop in the market, and the VIX exploded. The VIX jumped about 55% in 2 days, or from the recent lows, the VIX rallied 50+%, and that was fear. So people's positions have been stopped out. And then we had panic in the market with more people selling, and those two create the perfect storm, that it's completely flushed the market. And since that panic selling spike in the VIX, we've seen the market have a very strong rally. It bottomed that day, and we've had two strong up days ever since. So it looks like we're into a new significant low. And this week we had the market gap lower, which is an exhaustion gap lower, just like I talked about. We had that news event previously for the market top. We had this week the gap exhaustion lower, and since then the market's just ripped straight up, and it's on a tear because it's starting, I think, a new intermediate bull market run here that could be very significant to the upside.
And Chris, what's happening about that interesting food stock we were talking about 2 weeks ago?
Oh, yeah. So about a month ago, I guess we were talking about NIB, and we touched on it again in our last interview, I think 2 weeks ago. So Coca had been has been in a bear market for a while. It started to show signs that it was putting in a bottoming formation. We saw volume ramping up, and sentiment was very extreme. Nobody wanted to own it. And I was explaining how it looks like it's set for a knee-jerk reaction bottom. And this is a long-term play, really looking to off the monthly chart. But if you drop to the daily chart, you can see short-term that it has put in a very, very strong bottom. It had a big rally, and pretty much from the first time we mentioned it, it rallied about 18% so far, and it's got a very bullish pattern right now to continue to go higher and move up. I like Coca a lot, and there's another really nice oversold play that happened actually 2 weeks ago was the lumber commodity itself. So there's some really interesting commodity plays out there that have these very sharp knee-jerk bounces, And I think cocoa's got a lot of upside potential. I think it could be starting a new bull market, and we could see a very strong rally. This is really just the first rally in nib, I think, which is cocoa. It's got many more to come, and we could see probably the price rise another 30-40% from here.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen. His website, thegoldanoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.